Good morning. Welcome to MasterTrader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capra. We're going to take a look at what I call whipsaw markets today. And believe me, they are no fun. So, you got the four broader markets that I review every day and write analysis on for our Monday letter subscribers. And just to review what had happened here, we had this big move down. We had the breakout bar failure here, which I did point out in a prior video that look out for that possibly happening if it trades under that low. My expectations were for a pullback, but certainly not the one that we had, and all the way, this far, this fast. And then as the prices push up after a drop like that, the expectation, under normal market conditions or historical conditions, is to get some type of a retracement back down again. Well, rather than that, the markets went sideways here and created an area of support, and there were topping tails that formed. You can see right here on the spiders that suggested they were going to pull back, and then it retraced right back up into this little consolidation that was forming, which then suggests, hey, it's not going to go down. Buyers are stepping up and creating support here, closing near the high. Buyers are taking control. They break out above the highs. The expectation, and we do have expectations based on price patterns that form. We are price pattern traders at MasterTrader. So as we look at the patterns that suggest the direction of prices, right? So as this move down occurred, sure, it was extended. You expect a bounce and then typically a retest. And then we have our other concepts that guide us to other probabilities, meaning topping tails say it should pull back here after this big drop. However, the bar by bar analysis that I use now suggests that prices are not going to drop, right? Big, strong, bullish bar. Prices break out and confirm, which guides to a move up toward the prior highs. Transports broke out. Russell, weak breakout. Now, granted, the Qs are up near the prior high. That suggests some type of stall in momentum, which could have been sideways. Now it's pulled back a bit, and it's really not that bad. But there's going to be sellers here. But when buyers are truly in control, it doesn't pull back very much, or just goes right through it. All right, so now prices break out, and they come right back in again. That's the whipsaw, as it comes right back in. So now we're whipsawed here. What are we going to do? We look at the next reference point of support. What's going to happen there? We can look to the futures for some guidance as to what's happening right now. I can tell you the spiders are popping up here a little bit after the 8:30 news, but let's just take a look where the futures are at here. And so as it comes into support, we now see a bottoming tail beginning to form. It's very early in the day, so we really can't say that it's going to hold there, but let's take a look at the 60-minute chart. Still in a downtrend, but momentum, I covered this in yesterday's video, reading momentum to the downside. So yesterday, as prices went sideways almost all day, I said yesterday in videos, odds are choppy market, and that happened all day long till about 3:15, and I guess, and all I can do is make some assumptions, that at that point, buyers said, hey, this market isn't going to go up. Maybe we should step aside. And this is a nervous market, no doubt. And prices then dropped into the close, and then the overnight trading was choppy, and the momentum slows. I showed you how to read momentum through price. Look at yesterday's video. And now prices are retracing back up toward this major resistance area here at 272.20 or 272.20 here. And what are they going to do? Well, there are going to be sellers up here. We'll see what they're actually going to do if they can get through it. So that's what we're going to be dealing with here at the open in a little over a half hour to see if the futures can get through this area. Let's take a look at the NASDAQ futures. Okay, so NASDAQ futures, this is what we call a little mini breakdown failure. They were consolidating here. They break to the downside. Notice the green bar where it stalled there. And then it broke, and now it's retracing right back up again. And again, the news that came out at 8:30, I'm sure, is helping that. So we got this another whipsaw to the downside, but still below major resistance here. And so now the question is, can prices, get through that, and do we begin to recover, based on that? And today, then beginning to form a reversal day where then possibly prices can try and make an attempt to attack the old highs, going back to the S&P futures into this area of support, whether we can form that bottoming tail and maybe move back up again, or do we get into a new trading range here? So whipsaw markets are not fun. If you're going to trade them, money management is certainly the key, as always, to stay out of any significant losses. When we have this type of price action, if you want to participate in the markets, and of course there was the possibility that this could have kept going, and I wrote this to our subscribers, money management is key. You want to participate in this and trade small in volatile markets. The moves are bigger, so you can make as much money, sometimes more money. But you have to have your money management in place as to where you're going to put your line in the sand, how many shares or contracts you're going to trade, because if you're just shooting from the hip, you get wiped out. Hope that helps everybody. A little longer video, but I just wanted to go over this bit of an unpleasant market environment that we're having right now, and this too will pass. Unless they take a look at that Russell, break out, break down, but that's what the Russell does. Good luck, everybody. Talk soon.